Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu, 5:30 in New York City. It is the 29th day of March, Thursday, 2012, and this is the daily report for gold and silver. After trading lower for most of the evening session as well as into New York, gold has come back off of those lows, is right now trading just about unchanged on the day. You can see current print at 1660.56. That is in the spot gold market. Silver, on the other hand, is showing not only the ability to come off the lows this morning 31.62, but is currently trading higher and is up almost 20 cents on the day, over 0.5%. As you can see, current print on the board is 32.22. You do have platinum lower today by 16.31, and palladium up $1 at 6.49 on the day. First charts that I want to look at today are going to be very, very short-term charts. I want to look at the Japanese average charts. These are 60-minute in length for gold and silver, showing very similar activity. Let's go ahead and start with the gold. Now, as you can see, we're looking at a 60-minute average chart. And the interesting thing that to me is very, very noteworthy is as this market came down, and this is the testing of 1700 here, you can see that these highs come right around 1692, 1693. Market meanders down. A couple of pretty much false signals in the market right here and right here and right here. But it also, at the same time, maintained a good, steady support base right at around, call it 1655, right in that area. However, what I believe is that as this market could not take out any of these highs, which is indicative of this trading range right in here, when we consider over the last few days that it traded in between these 2 points after selling off, it did come in on a intraday low and actually touched around 1645. Nowhere near our stops, but this was absolutely a new low in terms of where the market had been over the last few days. We saw a very, very strong turnaround. Is it a key reversal? Well, it certainly seems as though it is a reversal from this downtrend, but my sentiment is that we really want to see it break above these tops right in here, call them 1662, 1663, and then I'm more confident that we'll be witnessing this market go back up. But I can tell you this, it found good support. You can see that the strength of this latest rally is pretty strong. Absence of lower wicks, of course. Nice size in terms of the candle size or body size. And that would be the gold market coming back from trading off on the day about $15 to basically unchanged where we sit now. Silver, very interesting in that we had a very, very similar market. It almost appears as though we're looking at the same chart. You can see that as the market came down, just as in gold, on a couple of occasions, we go from here, we make this low just above 3160. A couple of false areas right in here, in here, in here. Of course, we dollar cost averaged our position the other day. You got in at 3202. You have another position that is up, putting our average price right now at about 3250. 3250 is our average price. So we are back on the road, I believe, to a good, successful trade. Now, in the same way, you can see good body size here, absence of wicks. So, to me, those are very, very positive signs. Even on a short-term chart, we have a number of hours in which this market has been moving higher. So, we'll have to take a very, very close look at that. But I do believe that there is some potential in there right now. I feel pretty good about the trade. Traders, we're looking at our 360-minute chart, and you can see how these lows came in These are absolutely new lows on the marketplace itself. Of course, on a 360-minute chart, when I go ahead and blow it up, what you're going to see is that for the first time in a number of days, call it since maybe the 27th, we actually have a green candle forming, and that is indicative of that reversal that we saw as this market began to sell off last night. And as you can see, it was under pressure, there's no doubt about it, touching at a low of about 1645, but now moving back up well above this 61% level, which is 1653. Of course, our average entry price on our current gold trade is 1650. Now, traders, it's certainly true that we have one more trading day in the week. It is only Thursday, and I am looking at a weekly chart. But there's a reason for me pulling up this chart in silver here, and we're going to do the same with gold. But here's what I'm noticing. This market absolutely has gone through a couple of stages. As it hit its top, you can see that we have a shooting star at the top. The market trades lower. On last week's candle, you got a consolidating candle. Very, very small body. This is standard candlesticks. It is doji-like in that there is a space between the open and closing range, but it's very, very small. Now, that being said, and the fact that it's Thursday, look at the candle today. Because the range in terms of where it opened on Monday to where it is currently trading today is even tighter. That is very indicative of a market, if you're witnessing it after a downtrend or an uptrend, as a pivot point or a key reversal point, something that we want to pay very close attention to. And when we look at our gold chart, once again, as you can see, we have this pivot or key reversal area right in here. We are almost, depending on how it closes tomorrow, possibly seeing double dojis. Double dojis are very, very strong indicators in that the market is absolutely consolidating. And when you consider that the market has come down over $100 since testing and going towards 1800 without the ability to break through that barrier, it's quite evident, especially on this weekly chart, this double top that we've got right in here. But as this market comes back down, you're getting that really strong consolidation, and that is taking place in terms of the identification of these doji candles within the market. Traders, obviously, let's maintain our positions and maintain our stops. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and update on Friday. Bye-bye.